So let's get to a chart, and I just want to let you guys know and teach you guys how I trade all these bids and offers and what you can do with it. There are many times during the day that once a day I give out the basic bids and offers that what I see in my software, and I have an access, like these are limit orders, right? So you don't know that if right here it shows 13 million, that 13 million was actually executed. That could have been a fake order, someone trying to make you think that the market is going to go up. They show a big order here, you're going to see sometimes more than 25. Here it was 31 million. You'll see it, and in a millisecond, they have the ability with fix, using fixed connection, they have the ability to remove the order in a split second and make you think that the market is going to go up. So you're going to join them, and next thing you know, the market is going to go down. So that's the problem with limits, because it's kind of hard to figure out who's telling the truth, right? What their actual intentions are in the market. If their intentions are, joining the offers, or lifting the offers or hitting the bids. So you don't know, like 40 million, 30, 39 million. You see on the limits. So if you take a look at the chart right here, we went up by almost 1 pip because of seeing a big big volume on the offer. Actually, I think I've seen it on the bid, not the offer. So you have to understand something from the mind of liquidity provider. Their intentions in the market is to go against you, retail, right? And when you see an imbalance between bids and offers, right, like a huge difference, at least 2-to-1 ratio. And I'll give you a couple of examples later on with my own software, because it's very hard to replicate the same thing in a live feed. So when you see sometimes bids are twice the size of the offers, this shows what liquidity providers are thinking, right? Not necessarily means the market is going to shoot up if you see the bids are twice the size of the offers, right? Or vice versa. If you see offers are twice the size of bids, that doesn't mean the market is going to go down. That just means that the liquidity provider, they receive a rush of buy orders, right? And so now they have to provide liquidity and join the bid. So if someone puts up 5 million, which is not available here, the liquidity provider has to join the bids and provide 5 million for the person who wanted to, sell at this price or buy at this price. That's the beauty of using prime broker, because you can buy at the offer and you can sell at the offer. On your MT4, you can only buy here and sell here. So you cannot buy here and sell here at this exact price. So you have to understand the goal of my market maker is if they receive a huge buying orders or selling orders on one side, they have to provide, like, basically hedge your position, right? But their goal, if you see bids twice the size of the offers, their goal is for the market to go up. If you see the offers are twice the size of the bids, their goal is for the market to go down. And believe me, they're not looking for to make 10, 20 pips profit, right? They buy a little, couple of pips, maybe making 1 pip to 2 pips. They're more than happy because they do it tons of times a day. Sorry guys, I get kind of lost because I don't have my notes and stuff that I wanted to talk about. So I'm jumping from place to place. We'll do it better tomorrow. So I just wanted to let you guys know this is how I trade. So let's just forget about these for a second. We'll pull them up again later on. Me personally, if I want to take a look at the charts, I take a look at the tick charts, right? Not normal 1 or 5 or 10 minutes chart, because they don't show nothing. It's just so random. And one of the reasons MT4, it's limited to amount of time frame that you can see. First of all, MT4, you can only see minute charts, right? You cannot see tick charts or any other type of charts. And there's a reason for it. One of the reasons that, they have 1 minute, 5 minute, 15, 30 minute, and 1 hour charts is the more people trading those time frames, the less accurate your system gets, whether you like it or not. Because trading is a zero-sum game. If you make money, trust me, someone is losing that money. So it could be either you or your liquidity provider or a bank or anybody else. So if you make a penny, someone is losing a penny. And for that reason, if you're, all of you guys are trading on a 15-minute time frame, what you notice is, like, let's say you have a system, you've been working on this system for the past 6 months, it's doing great. All of a sudden, it goes downhill. Or you had an EA, and this EA was making pretty good money for the past, couple of months. And as you know, most of the EAs that I have seen personally, I have not seen an EA works more than a year, right? 12 months. That's the max I've seen. Unless that EA is somehow semi-automatic, right? It's not fully tradable. That, sometimes you have to make a decision for yourself to whether, to buy or sell. Because other than that, if you have something automatic, your broker is going to figure it out. They're going to hit your stop, left and right. You'll be surprised after a while how these brokers work, which is something else that I'm going to talk about tomorrow. How your brokers work, stop hunting, and etc. So try to use, if you want to even use charts, try to use tick charts. So each tick means a transaction that has been taken place, and you can see it on the chart. It's I don't know, to me, I think it's much easier to read tick charts and to be able to say, which direction the market is going to head, rather than looking at the 1 minute or 5 minute charts. Because to be honest with you, each currency has their own personality. Currencies like, let's say, Euro USD, Pound USD, I'm telling you this from experience, that currencies, they're like people. So everybody talks about psychology of the market, but nobody even knows what psychology of the market is, right? So everybody thinks that they have to work on themselves and nothing else. And next thing you know, you come to the market, you cannot find a trade, so you start cycling through different currencies. So you see that Euro USD is dead. You're like, okay, fine. I'll go to Pound USD. I'll go to US yen. I'll go to Pound yen. So you start cycling between these currencies to find a trade. Well, what I do is different. I try to find any reason not to trade. So if I find a single reason that goes against my methodology, I just stay out of the market. So if I cannot find that reason, then if I have a signal and if I have a trade, I'll take it. So that's how your mindset should be, uh, if you want to hear it from me. It's hard in the beginning because the most hardest part about trading, which I have learned the hard way, is patience. Like learning how to be patient. Trust me, is the hardest thing to do. It takes you years and years after losing, lots of money. Then you learn that you have to be disciplined. Then you learn that you have to follow a system or a methodology. And you have to follow it as if your life is dependent on it. Otherwise, working in the Forex market, there's no difference between Forex or you're going to the casino and gamble. So if you're not disciplined, like, don't get me wrong, even if you're disciplined in the casino, you make money, right? But your greed and fear, prevents you from making money. You win a couple of hands, then you take a big risk, and you lose lots of money. Anyways, so let's get back to the chart. Tell you how I do it. Like, I've done these things so many times that's why I'm saying, I don't even need a chart. So I have these numbers, at the back of my head. So I know if we hit, like, let's say this number, what the market reaction is going to be. And then I'll go back to my market depth order flow. I'll see the flow, and I'll have to try to figure out the fakes from real orders, and which is done based on algo that we have on the software. And then you have to take a look at the time and sells of some of the executions that's been taking place to confirm that what you've seen on the limits actually has been executed at market, or actually has been executed with limits, right? Because whenever you have a limit order, it becomes market. So let me put this up. So for now, just imagine what you see down here are the execution, right? So every time any of these changes are actually executed. So in my software, it shows me how much volume is available at any given price. So we can average it out and see, you know, around 5 pips up and down of any price. So let's just say market is sitting at 01. We can see 5 pip up and down how much volume was actually executed or is waiting to be executed. So the limits that you see here, of course, you see a 39 million or 53 million right here. There is a chance that it's going to get taken out or canceled within, a second or two, right? As soon as they place it in the market. But there are some bids and offers that they're firm. Like some people, they just leave it and don't move it. So there is another way that you can figure those things out that I'm not going to talk about here. So basically what I do, or what you can do, is to just mark down all these bids and offers, right? Like let's say I say there's an offer here. There's an offer here. There's an offer here. And there's an offer here. So these offers means, so these are the type of bids and offers that I let you guys know once a day before we start the session, right? I'll post it on Skype or I write it down on the webinar room every day. So once you see those, what I do is, I draw the lines on the chart to see where the big orders are in the market. So the funny part is, like let's say for example, at around 8:45, right? Like in the beginning of the day, somewhere around here, I gave you the bids and offers, right? So you see the market just touched the offers and dropped. This is just an example. I'm not saying, this is the actual bids or offers. This is just an example. So you see the market went up, touched the offers, and just dropped. So this is news. We really don't care about news because, bids and offers 10 minutes before and after the news are not valid anymore, right? So you at least have to wait 10 to 15 minutes after the news to be able to take those into consideration again, unless I tell you those bids and offers are not valid anymore, right? So the goal of market maker is to make anywhere between 1, 2, 3, 4, or 5 pips. That's the max they go for, right? They're not going to go for like 10, 20, or 50 pips. So you see the offer here. The market is coming down to the offer, right? There's two ways that you can think about this, that your offers or bids, they act as support and resistance, right? you shouldn't say that the offers, you're going to use the offers as your resistance only and bids as your supports, because they could work both ways, and sometimes, they're very, very accurate, as I've seen myself through the years. That sometimes, the price hit the offers very close to it, like let's say this one, right? Like half a pip shy of the offers and just drops down. So that means most of these bids and offers are levels that not brokers, liquidity providers and banks, they are trying to protect because of a big amount of volume that they have. So when you see these things, either at bids and offers, when we hit them, right, you sometimes see that if you break through the offer, you're going to run down a good 5 pips. Or when you go back up and hit the offers, you're going to run up a good 5 pips. These are because, those offers, or bids and offers, since they come with a big volume, it will have an impact in the market for the next 1 to 5 pips, right? So since you don't have the access to the execution and timestamp, it's kind of hard for you to figure out now which direction exactly is going. And even if you have the time and sales and order executions pricing feed, if you have it, still it's too hard to figure out which side of the market is heading unless you know how to use the data. And I'll try to teach you guys some stuff later on, but it is still hard. This is not something that you're going to make money with it 100% of time. There are months that you're going to be 50-50. There are months that you're going to be right 40% of the times, but with the help of money management, you're making very good money with it if you know how to manage your money. But there are months that we don't even have a losing trade, right? So that doesn't mean we're gonna repeat the same thing every single month. So it happens maybe once or twice, like 1 month or two months per year, that we have 100% winning trades, right? But it happens very rarely, and usually if during the month we are range bound, if you see on your chart that you're going range bound, you'll know that we're gonna make very good money within the next couple of days. But when we actually go in the trend, the only chance that we have making 5 to 10 pips and doing it over and over again until you can catch a trend. Like we've done it many times, as most of you guys know. I usually have 4 targets when I enter a trade, and most of the times that you see we hit the first target, we go down or up maybe by 10-15 pips, then it comes back and hit our break even. But we keep doing it, and we did it so many times that I think it was like 2 days ago we hit the home run. So this is what matters. Keep doing something over and over again until you catch the big trend, and you can catch it at the beginning of the trend, not in the middle of it, right? Like, just be honest with yourself. How many times you heard that trend is your friend, and how many times you were actually able to catch this trend, right? You don't need to tell me. I know the answer, but just be honest with yourself. So I put all these bids and offers on the chart in the beginning, and sorry guys, I think I was disconnected. The voice was disconnected. So I was saying, again, I want to say this again, just in case you guys didn't hear me. I draw the bids and offers on the chart, and I treat them as support and resistance, and then I'll go back to my software, try to figure out who's executing how many lots, how many volumes, at what price, and try to figure out which direction the market is heading. So once I figure it out, there's two ways that I trade. The first one is I have an expiry on the amount that the price should move before I enter the trade. So for example, one type of trading that I do is, you heard it many times before, that I tell you guys, if price stays between, like, let's say 96 and 1100, right? So 1096 and 1100. If the price holds between these two numbers, I will go short or long at, like, let's say 11 o'clock. So if by 11 o'clock, exactly 11 o'clock, right? If the price holds between these two numbers, I tell you that I either go long or short. So you'll know it beforehand. Sometimes you know it up to 15 minutes before, because I can see the accumulation of orders in my software. Like, everybody's trying to execute order, uh, and they execute, it goes up to like a couple of $100 million. And it's not just buy orders, it's sell orders too, but the ratio between bids and offers, right, are not the same. So they're like 5-to-1 or 6-to-1, uh, the ratio of the execution. Well, of course, you have to take a look at your time and sells to confirm some of those. And then I tell you either I go long or short. There are times that I tell you that wait a couple of minutes, I'm using market order, and I execute trades. There are times that we have limit orders. So let's say the price is here right now, and I say if the price gets to, let's say 11:15, I'll go short. And the reason for that is, since I have the feed to some of the big hedge funds and liquidity providers, and through years of practice and watching these things, I know at which levels which liquidity provider or hedge fund is interested in these levels, right? So let me put this up one more time. So right now, these two are hotspot, right? But you don't know, since you're getting your feed from your broker, you don't know which one of these orders are from which liquidity provider or hedge fund or even dark pool or even a bank. So you don't know these things, right? Maybe this $20 million are from, let's say, Citigroup or UBS or Reuters. So since you don't know and you see just the big picture, right? As brokers, they're trying to make you believe that you're seeing the big picture. But the thing is, you have to have the access to see which liquidity provider or a hedge fund placed this order. And I'll show you an example of what I mean later on in the next couple of days. I'll try to take a screenshot of some of these orders comes into the market with their name and identity. Like, I don't know if you guys have ever seen MB Trading Platform. Like on MB Trading Platform, on the left side or right side, it shows who's executing those orders. Let me see. I think I have the platform myself. Yeah, I do. Let me show you what I mean. So, can everybody see this? Guys, can you guys see this? Okay. So you go to Euro USD. You see time and sells here, right? Because MB Trading will give you an access to it. Basically, this is pretty much useless to the max, because what you see here are macro lots being executed, which doesn't even make sense. You can compete with the big boys with macro lots. Like, this one was executed at the bid or the ask, but the volume is 1,000 of the notional currency, which is like here. It says lots 1 equal 1K, right? So that means in MT4, if you buy 0.1, 0.01, this is what you get. All these thousands are 0.01. So their book is very, very small for retail. Maybe they have the big book, but they're not going to give you an access to it. So, but in this one, you see TDFX. So all these orders are executed on TDFX. So if the whole thing gets executed, I mean, in my software, when it gets executed, I'll see that this 22 million was from TDFX, This 4 million was from Barclay. This 27 or 13 million was from Citigroup or Sasko Bank or Reuters, Deutsche Bank. I don't have the feed right now for Deutsche Bank because my account went below 5 million with them, so they froze my feed. Anyways, this is how the debt looks on TDFX, but pointless. You have the time and sell, but you can't do anything with it. So anyways, I go to my software, I take a look at the time and sell, but I don't take a look at it myself. It goes through my software based on the algo and the pattern. We have a methodology that when these situations happens, it shows us if the market is going to go up or down. It has to be above certain volume, like we need execution over $150 million. Bid to offer ratios has to be 2 to 1. And if the execution and time and sells, they match each other, plus the limits, then we either take short or long trades. And whenever we place any type of trade, either long or short, the ones that has expiry, that means like by 11 o'clock, this thing does not happen. If this thing does happen, we go either long or short. If any of these situation happens and we enter the market, the first thing I do is place my stop 10 pips. And I use hard bid stop. The hard bid stop means that when you sell, you're selling at 03, for example. You're executing at market order, right? So you want to sell 5 million at this price or 4 million at this price. It depends on your strategy. It depends on your money management. So once I decide which direction I'm going to take, I place my stop, which is 10 pips, always. I may edit or change my stop from time to time, but as soon as I enter the market, my stop is 10 pips. Then I start setting my targets, which I have 4 targets. So let's say I enter here, like I entered on this one, this candle. Then I place my stop. This is my stop. This would be my first target, second, third, and fourth. So the first target for me always is 10 pips, second target is 20, third target is 30, and last target is 50 pips, right? Occasionally I change my last target to 100 pips. It depends of what I see in the market and what I think the market is heading, but anything over 10 pips, I'm just guessing. Just to be honest with you, it's nobody can say 100% where the market is heading 20 pips from now. It's just a pure 50-50 guess once you do that. But I believe anything less than 10 pips, you can accurately say which side the market goes. And as you guys seen, sometimes we place a trade. The trade doesn't even go against us and goes straight for target. Sometimes we place a trade and it takes 2 hours, right? Like we place a trade, it takes 2 hours to hit the target. Sometimes, like we had a trade today, that it took like 30 seconds to hit 10 pips. So it all depends. Like, don't think $100 million or $200 million comes into the market is going to change anything. The market is huge, and by just accessing one or two liquidity provider, it won't help you. You have to figure out which liquidity provider owns bigger market share in that currency. Like, I know for the fact that Reuters owns 80% of Euro USD. So they execute 80% of the transactions on Euro USD. So if by any chance you can get your hands on the order flow on Reuters, then that alone will help you a lot. You don't have to go after other liquidity providers and stuff. So which, something I have. But Reuters is kind of tricky. There is, I believe, $2,500 a month subscription on their terminal. First, you have to have lost connection again. First, you have to have, I believe, $5 to $20 million account with Reuters. It depends. If you have a connection, you can open up $1 million account with them, but very hard to get the data feed, like the order flow feed from them, if you have, account less than 5 million. And when you call them, they're just gonna deny it, and they're gonna say no, they don't have it. Like, I know Sasko Bank. I was speaking with one of the CEO of the Sasko Bank the other day, trying to convince them that give me an access to their fix. So what they told me in return, that they have a fix. The funny part is, they put it up on their website. You can trade through fix APIs, just to get customers. Give them a call to see if you can get the fix. So I spoke to them, and they said, they use the fix just for themselves. They do testing on it every day. So it won't be reliable if they want to give their fix to me or anybody else, right? So they come up with these type of, stupid answers. And then at the end of the day, they try to convince you to go either on the new MT4 that they come up with. It's called DMA, which I'll show you later on. Like, anything dealing with MT4, I hate it. But they have, a very nice feed on their own platform, which I don't know what it's called, but their price feed, Sasko Bank, is one of the fastest in the market. I don't know the last time that Sasko Bank feed freezes. So this is something that I use for arbitrage. That I'm going to talk about arbitrage a little bit later on. But let's get back to the point. Finish up with the bids and offers. So this is how I trade. So make sure when you enter the market, your stop is 10 pips. First target is 10, 20, 30, and 50. Depends on the market. If we have high volatile market, there are times that we take our profit at the first 5 pips, right? Not the whole thing. I just take, like, let's say if I had 40 lots, right? Going long with 40 lots. So what I would do, as soon as I hit 5, I take 5, 6, or even 10 lots out of the market. So when I see I'm in a high volatile situation. High volatile situation means you're seeing these bids and offers, right? You're going crazy above 50 million. So if you see stuff like this, I see stuff like this, I take my first profit at 5. Most times I don't even move my stop. I just take some money, let it either go to my target or hit my stop. If I see things changes big time, or I see a shift between buy and sellers, then that's the time I move my stop to either break even or make it, 1 or 2 pips below my entry. So if I lose, I don't lose that much money. So this is how I manage my trades, because I have not seen a single person who's successful making money with 1 target and 1 stop. Even 2 target and 1 stop, I have, it's a 50-50 chance at the end of the year you come out break even. But you have to keep your targets, leave it for a long time until it hits your target. That's the only way that you can make money in this market, is to be able to keep on trading until you catch a trend at the beginning of it. Like some of the people in here, they told me that I usually trade reversals, right? But I do not trade reversals. I don't care which side the market is going and what you call it. If you're, telling me that, oh, we are in an uptrend right now, why are you taking a short trade, right? You're going against the trend. Everybody says trend is your friend, and I say trend is your enemy. Because, I don't know, to me it's hard to catch a trend or ride the trend, right? Tell me how many times you got lucky. So what I basically do, I stick to my methodology, place a trade, and since the only thing that moves the price beside greed and fear, supply and demand, the only other thing that moves the price is time. So you have to give your trade some time to develop, right? Other than that, if you're thinking that you use order flow and you place 200 trades a day, making 1 to 2 pips each time, it's going to be tough. You're going to burn out in less than 2 months, and you're going to lose lots of money because you're going to start making so many mistakes by just looking at the data and not having a logic behind it. So this is basically how I manage my trades, and I'm just so tired that I wanted to talk about something else. Arbitrage. Okay. There's a couple of other tricks that I want to teach you guys that you can try it yourself, see what you think of it. So arbitrage is something that people been using for many years. In fact, one of the secret of Warren Buffett was arbitrage. Well, of course, many people, they say I haven't read Warren Buffett's book, but he claims that his strategy is buy and hold, or he says, the way I invest in the market is I think that as soon as I buy or invest in something, the stock market is going to close and never open for 5 years, and won't open for 5 years. That's how he invests. So he thinks that if he invests $10,000, he's not going to have an access to his money for the next 5 years. So basically, I think, from what I heard, is how he made his fortune in this market. But basically, he made it through arbitrage. Arbitrage is opportunities. I'm not talking about Forex, but arbitrage are opportunities in stock market that you can find different asset classes or different I don't know, companies that, let's say, for example, like you buy a share of IBM, you buy gold, and you sell Coca-Cola, right? At the same time. You do this at the same time and you make instant profit. So you don't need to wait for the price to move to be able to make money. But unfortunately, after all these high frequency trades that caused a big market crash a couple of years ago, all these HFTs, they caused a big market crash a couple of years ago. And they stopped. Like some brokers, as soon as they find arbitrage patterns in your trading style, they shut you down. Like the only way that brokers these days they can figure out that you're doing arbitrage is your account grows 20% a month, right? Or 100% a month. Your account, like you have $1,000 account, and at the end of the month is 10,000. Well, of course, they won't say anything for the first couple of months. They want to make sure that you do arbitrage, ARBs. So most of the brokers, what they did, and this is very important before you even think of doing arbitrage or opening up an account for arbitrage with any broker, you have to read their contracts, right? Many people, I hear this from many people. They say, there's no way to make money with arbitrage. Well, of course there is, right? But you don't know how to do it. And that's the problem. Like, one of the things liquidity providers do all day long is ARBs. There are different ways to do ARBs, but ARBs are basically, it's like, let me show you an example of ARBs. Close these things. By the way, does anybody has any question regarding what I spoke so far before I continue? Because I don't even know what I talked about. I'm so tired. I feel like I'm talking gibberish. So nobody has no question? Smart people. Okay. Let me show you an example of ARB. By the way, this is Sasco Bank DMA, which you see on pound yen, you get about roughly 1 pip spread. I take a look at this for arbitrage most of the time because that's one of the fastest feeds out there that I know. Faster than this, let me see, let me think. There is one feed which is way faster than Sasco that I'm thinking, I forgot the name. I don't know. I tell you, like CGQ, Sasco Bank, they're one of the top fast feeds in the market. Like even by looking at them, most of the time you can find very easy ARBs opportunities in the market, which I'm going to show you in just a second. Like take a look at this chart. This is a 15-minute chart, right? So let's see. Take a look at this for a second. I'll give you a minute. Take a very good look at it. I'm going to switch it with another broker and tell me what you see differently from between these two lines that I'm going to draw on the chart. Between these two, tell me what you see differently. Okay, now I'm going to switch over to another one. Let me just mark it down first. Okay, ready? There you go. Or you won't be able to figure it out. So let me make this a little bit smaller. Find the exact places. Same as this. Okay, looking at it side by side, do you see any difference on the pattern or candles? Yeah, there is one big difference that you're going to see. Can you point that out? I'll make the zone smaller. Let's see if you can figure it out. So between these two and these two, there is a candle which is different. Okay, I'm going to point it out. I'm going to point to it. This is the candle that I'm talking about. There is a visible, huge difference. Like from the close to the high is 14 pips. From the close to the high of this one is 19 pips. So this is, for example, one of the type of arbitrage opportunities that you can easily catch by just looking at it, right? There's another thing that I had, like a long time ago, I had a script on MT4 that would alert me if the feed is frozen. Sometimes, the feed is frozen on one broker. Like, let's say, go to the beginning of the chart so you can see it visually. Like, take a look at the last candle. This one, even this one and this one is very different, right? So, but these two are new ones are exactly the same. So what happens is sometimes FX open, the feed freezes, right? At, like, let's say 10:03, and you see Sasco is at 10:09. So these are the opportunities that, by just looking at two different brokers, you may find, a good 3-4 easy pips free. But that doesn't happen all the time, right? It happens maybe once a day, and it's hard. If you're lucky, you're in front of your computer looking at two different charts 24/7, you may be able to catch it. But mostly these are done by EAs these days, unfortunately, because there is no other way that you're able to catch these arbitrage differences just by trading it manually. So if you want to trade it manually, if you're lucky, then yeah, you're able to catch the move. But I have found a better way that you guys may be able to make money. I haven't tested it 100%, but I'm going to share the secret with you, which is looking at different brokers, like let's say Euro USD, and choose a binary option. So and choosing a binary option. Can you guys hear me? Can you guys hear me? Okay, does it still have side noise? I haven't got a chance to change my Ethernet board. I gotta change that and fix it. That's why, this is causing the noise on my internet. Because I have two systems. One of the systems that I use it for trading only, I have no other applications whatsoever, and it has a dedicated internet, which I had some problem with that a while ago and got fixed. But this PC that we're running the meeting has Ethernet cable noise that I have to fix. So I'll fix it today. Hopefully, will be good for tomorrow. So, can you guys still hear me? Okay. So back to ARP. Yeah, see if you see a gap on one goes another way, the other one goes the other way. So these are, opportunities that you can take, but you need a computer program for it, not even an EA. EA doesn't work properly. Like one of the reasons that I'm saying I hate MT4 is we used to be able to tap into, when you go to the data folder, you go to the config, these are the servers that you connect to at your MT4 broker, right? Like right now on Sasco, mm, they gave me an IP address to connect to their demo DMA to just take a look at their spreads and stuff and figure it out. You can't even trade with it. Um, so, yeah, as I was saying, before, if you used to be able to connect to their servers directly, which is the fastest way to trade with MT4, no delay, minimal latency issues if you tap into the server directly. So we had to reverse engineer MT4 a long time ago and build a software, reverse engineer MT4, put the servers into our software, connect directly to the servers and place trades. But unfortunately, we received an email from MT4 that they're going to sue us if we're connecting to MT4 this way. It has to be, if you want to trade, it has to be through EAs. And, us knowing that EAs, they have lots of latency issues. I'm not talking about $1,000 or $10,000 account, right? You still face so many slippage and stuff as soon as you go live. Um, I'm sure that you guys know what I'm talking about. But once your account grows to $50,000, then I tell you, you're gonna be pissed every day. Like you want to place 5 lots, 10 lots, then your orders are kind of crazy. They don't get executed uh, on time, or you have a slippage, and you're trying to make 5 or 10 pips. You have 1 or 2 pip slippage, which is unheard of these days, right? But that's what they give you. And if you call them up and say, why did you do this to me? They're going to come up with the most stupidest answer you can ever hear. But anyways, before we used to tap into their servers on MT4 and trade, but now you can't, and they keep changing the patterns from month to month, which makes it kind of hard. And it was a long time ago, I think couple of 5 years ago, 6 years ago, that we decided enough is enough. Forget about MT4, put it on the side, use fix. Anybody who offers you, then we were able to grow the account and go prime brokerage. Because at the end of the day, that's the only way that you can make money. Join the big boys. So let's get back to arbitrage. So I was saying, Forex, yes, could be hard to make money with ARBs, but I have found another way that you can do ARBs in Forex and binary options, right? Not all binary options. Some brokers, like I'll give you an example, and you can check it out yourself, right? It's very interesting what you can see. Let me pull up a binary account and show you what I mean. So take a look at this. Let's compare it with Sasco, which is a fast feed. So I went to Optic. This is one of the binary option companies that I use. Um, I'm just testing this out. I'm not 100% sure yet, but I managed to make pretty good money with it. Take a look at this. I put one-click trading. So options. Do you guys know anything about binary options? Very easy. You either call, put or call, like you say either goes up or down. So if I click on down, if the market stays below my entry by even 0.01 pip, then I'll make 60%, 66% return on my investment. You can go as low as every 30 seconds on expiry up to whatever amount that you want, like 60 minutes. If you go, they pay you out 85%. That means if I click down at this price, if the market stays below my entry, doesn't matter if it's 1 pip or 100 pip, they give me 85% of my $25 investment. Or you can go 30 seconds or 1 minute. So what I found on 30 seconds, take a look at this. Take a look at the big jumps, not small jumps, right? Maybe 1 or 2 pip moves on Sasco Bank, and see how behind the binary option is their feed is from Sasco Bank. So it can't be Sasco Bank all the time, but you can find other brokers, maybe their feed is faster than Optic, right? This is something that I've been practicing for the past couple of months, and I'm having a good success with it. I'm not 100% sure yet. Otherwise, I would have told you this is the way to go. But you can open up a demo account with Optic. Please keep this as a secret. Don't tell everyone about this, because if what I'm saying is true, right? If you tell everyone about this, Optic is they're going to catch up to it and put a hold on it, switch their feed to something else, right? So I'm thinking that after maybe 10-20 trades that you win, maybe you should lose intentionally a couple of trades just to not to make them suspicious. But I'm still practicing with this. So can you guys see this? Okay. So take a look at this. Whenever Sasco Bank goes up by 1 or 2 pips or down, now this one should come down. Look at this, right? So you have enough time to click either down or up to make money. Let me just give you an example right now, if I can catch it. But it's hard if you want to click on it, right? We have to make an auto clicker, right? So I'll figure this thing out. I'll talk to Pablo, see what he thinks. That we can use, like first we have to test out which broker is faster than Optic on the price feed. And then as soon as we see a 2 pip jump either up or down on that specific broker, watch what the auto clicker needs to do is just click either up or down. So, and it's 30 seconds, the chances are you make money is very, very high. Because, especially during the slow market hours, like 1 o'clock to 5 o'clock in the afternoon, that's when, that's a jump down. I think I caught it. There you go. Instantaneously, I'm in profit, right? Holds down for 30 seconds. Now it went up. I was not lucky because, by the time you click, by the time you see the jump, I think I made $25 on this because the last second went down. So by the time you click and you see that jump, sometimes you're not going to catch it on time, right? And that causes you to lose the trade. But that's why I'm trying to widen my, like how many pips the market moves. I experiment with it. Look at this now. This is going to drop, right? You can easily make money with this. This is called arbitrage. So you see which broker moves faster than the other one. It's hard to do it with Forex to Forex broker these days, like, but it's very easy to do it with binary options. So I don't know if you guys want to take part in this. Each one of us can open up a demo account with the different binary options companies, and for about a month and a half, we try to test it with different feeds on different brokers and find a good feed. All we need is just an auto clicker, right? And then you'll be laughing. So let me find another example. How cool is this? Have you guys ever thought about this? I'm not gonna actually, put this recording public. Can you guys still hear me? Okay, I'm gonna cut the webinar short because seems like the Ethernet cable comes and goes offline. So I wanted to run and buy a card so we have no more problem. Yeah, I'm just gonna give you a quick example of how easy it is to make money with this, but clicking on it is hard. I'm late again, but yeah, I lost internet connection. Gave me a $16 return on my investment, and I'm to $7.85 now. But that was, I got very lucky on this one because I clicked way too late, right? And I'm trying to catch a big move down or up. Like, it should go up right now. There is a very noticeable delay. Right? But that doesn't mean you have to click up every tick that the broker goes up, right? You have to at least wait for a good jump down or jump up, at least a pip or two, right? So that way, if the price goes against you a little bit, you're safe. So let me see if I can find this. Oh, by the way, I have to put this on a 1 minute chart. So I'll put this on a 1 minute chart. So on a 1 minute chart, it's easier to catch 1 or 2 pip moves. Not at this time though. Like look at this jump on this one. Not at this time. Right now I should have clicked on buy. So usually I think after 1 o'clock or 2 o'clock Eastern time, when the market is slow, it's good time to make money. So I think I caught it on time. Yeah, it's giving me $16 return, which I caught it right on the jump. Made another, like, you're gonna see it jump down now. So I'm not actually trading these. I tell you which ones. Like at least you have to see a jump like this one, right? I think they are about a second or two behind, which makes it very interesting to make money with them. See, not these small moves. These, because, they change very rapidly. They can go up half a pip or 1 pip, come down 1 pip. It's hard to catch. Now look at the jump here. So this one was a good 2 seconds behind. So this is very interesting that I have found recently. How easy it would be to make money. Like, beat them at their own game, right? Yeah, seems like I lost internet connection again. Okay, guys, I'm gonna pause this recording, stop this now, and I'll come back later on. I'll go fix my PC. Um, uh, yeah, Zari. Um, Zahari, I think you should only look at the euro. It could happen on other pairs. I haven't tested it yet, to be honest. That's why I wanted to share this with you guys. I've been testing this for the past couple of weeks, right? It's doing perfect on Euro USD. The only thing I'm lacking is lack of judgment. Like by the time I wanna, I see this jump on this one, I wanna click. Sometimes I'm too late, right? And I could get the slippage, but 80% of time you make money. with this. So the only thing that we can fix it, then not to lose that, 20% of times, you're going to lose anyways, but you're going to be right 95% because of these jumps, since your only expiry is only 30 seconds, right? And in a 1 minute candle, there is only how many pips market can move in a 1 minute candle, right? In one direction. Like usually when you see candles on FX, they're usually most of the time like 50-50. It's one direction only, right? Yeah, there are times that you get these whipsaws, right? You don't care about these, but the life of a 1 minute candle, you take half of it, you can be right more than 60% of times. These are all statistics that I'm talking about. But with help of auto clicker, I think this system is going to be very accurate and very, very profitable. I think you're going to forget about Forex. Well, we still trade Forex because, I need to make decent living from it. But this is going to be something that, you can make extra cash with this. There's other types, like, you can do currencies, you can do commodities, gold, silver, Apple stocks. You have high and low. From start to stop, right? You're going to say if the market stays higher or lower within this time period of whenever you enter the market. And you have an expiry date time. Like you change your expiry, it gives you this. Range, high and low, one touch. One touches are kind of hard, and it gives you 400% return on your investment. So that means before this time expires, do you think the price is gonna hit the bottom or the top line? And if you're right, it hits, you make 400% of your money. So you invest $25, you get back what? $100